Welcome back, and joining me for a closer look at what's played out on the market scene today is Lonwabo Maqubela from Perpetua. Thank you so much for your time, Lonwabo. Before we actually get into some of the macroeconomic news and the little bit of micro news that we had, I do notice that the JSE is trading at near record highs. How's this new reality for the local boss?
Yeah, it has been quite an interesting beginning of the year, particularly with some of the large caps that have done quite well. So the likes of Richmond, MTN have had strong recoveries. And then obviously the gold stocks as well, trading at all-time highs. True for and Gold, Harmony, Goldfields, with the gold price where it is. And then I'd say kind of today you're seeing the platinum miners also have had a very strong month. They do seem, we're just commenting in the office earlier, that they do seem to be quite volatile and very marginal PGM basket moves. So, the Implats, Amplats, Northam up 40% plus over the last month. So that's all driving the market higher. But I think there have been some laggards. I mean, if I look at some of the financial stocks and the banks, etc., some of the local stocks as well have been quite weak. So some of that, let's say, initial excitement around potential GNU higher growth seem to have moderated since the beginning of this year.
Well, this is definitely good news for PGM investors that have been searching for a bottom. Hopefully, they found it. Let's talk about some of the macro news. As I was reading through, I've been reading through this week and seeing news coming out that Morgan Stanley has been upgrading their forecast for Chinese growth, 4.5%, although it's not the 5% that China has, the target that China has set for itself. And then today I also saw that they upgraded or their targets for the stock indexes, and it looks like it may be a good time for China, and particularly the equities at this point. What are you reading? Is that the general consensus in the market?
Yeah, I think, and I think it's a good point you raise in the sense of the general consensus. If you think about it, a year or two ago, the market was saying that China is not investable.
Yeah.
And now you've seen this change of tone, particularly as some of the policy risks around the US have emerged. That investors are looking for diversification. And possibly some of China's more, initially the downturn was led by some draconian regulatory changes.
Yeah.
Some of them have walked back. Some of them have been achieved and maybe were necessary to kind of sustain growth at a higher for kind of level. But nonetheless, what you have seen, and I guess what we've been saying to our clients is that we thought that you're likely to start seeing improved numbers from China, if for no other reason, base effects. So the fact that the last couple of years have been quite weak, you will start seeing an improvement. Just purely from some of the data points. And then I think the companies have also, particularly if I look at some of the large kind of tech stocks, they've really, I think it would be fair to say that they've delivered. You've seen some cost cutting coming out of them. And then you're also seeing that, they can match, it seems, the US in terms of AI. And so that's certainly increased the level of interest that the market now is showing towards Chinese equities.
All right. Well, before we get to Met-A, a quick comment on the UK spring statement that was delivered this afternoon, seeming to be confirming the spending cuts. And it seems that there's a difference in how the markets have kind of reacted to this, not really reacting very well to the October budget, and then seeming that they have welcomed some things in this statement. Just a quick comment there.
Yeah, I think if one looks back a couple of years ago in Liz Truss and the initial deficit that was announced, is that so at least they're taking the right steps towards addressing the concerns that were raised by the budgetary office, and so I think that's what the market is kind of maybe a bit of a sigh of relief. But certainly, I think you highlighted in your opening that they announced some spending cuts, particularly on welfare. And if you kind of look through it, it actually looks like it's disability payments, unfortunately, being cut. And then, and as you alluded to, also increasing defense spending. And then they've made some, I'd say, marginal increases towards taxes. Which as a percentage of GDP is expected maybe to go up by some 3 percentage points.
Yeah.
And it does seem to have been received positively by the gilt market.
Okay.
I mean, it does dovetail quite nicely with the UK inflation as well that you mentioned, because on the one hand, you've got this low growth, on the other hand is this inflation that is lower, but it's still sticky, especially when you look at services inflation was running at 5%, housing inflation, so rents running at 8%. And later on in the year, they've got a minimum wage that'll also start hitting the inflation number. So if I was, the ECB sitting there, you kind of say, yes, great that the inflation is lower, but you're worried that, some of the structural drivers remain concerning. There's a question mark around whether or not the US will initiate tariffs, etc. And so you can understand the caution with they're acting.
Yeah. All right. Well, won't be able to get to Met, but I will be talking to the CEO shortly. But let's get to your stock pick for today, Lonwabo.
Yeah. So I mean, so in the end, I kind of chose these South African diversified mining companies, Exxaro and ARM, and in both, if you probably look at them, they're trading at share prices that were trading at a decade ago, on very depressed multiples. I mean, if in the case of African Rainbow Minerals, they have a stake in Harmony, which is worth nearly half the market cap. So if you were to strip that out, kind of monetize that somehow, you're paying 2 times the earnings for the rest of the business. Same story with Exxaro and Kumba. So I guess the message that the market is sending is that there does need to be some kind of capital restructure in these businesses in order for them to re-rate. I think that's kind of like the message that the market is sending with these low valuations, that something's got to give.
Indeed.
Yeah.
All right. Well, thank you so much for your time and for your insights there, Lonwabo. Good to see you. That was Lonwabo Maqubela from Perpetua.